Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today, we're looking at New Fortress Energy.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis.
Okay, so let's just jump right in. The whole bull case, the whole story for New Fortress Energy, it really seems to hinge on one thing.
It does. It all comes down to their fast LNG concept. I mean, if you're looking at this company with backward-looking numbers, you're going to miss the point entirely.
Right. It's a speculative infrastructure play. It's all about what they're going to build. So this fast LNG, for anyone who isn't familiar, what makes it such a potential game changer?
Well, think about traditional LNG. You're talking about these, massive multi-billion-dollar terminals they build on the coast. They can take, 7, 8, almost 10 years to build?
A huge undertaking.
A huge undertaking. Fast LNG is.
Yeah.
It's the opposite. It's modular. It's mobile. They basically convert old jackup rigs into these offshore liquefaction plants.
So instead of this giant coastal facility, you've got a floating factory, more or less, that you can park right on top of the gas source.
Precisely.
Yeah.
And that lets them go after these gas reserves that are kind of stranded,
Sure.
Too small or too far out for the big players to bother with. The capex per ton is way lower, but the real advantage, the real moat, is just speed.
How much speed are we talking about?
You're compressing that timeline from maybe 7+ years down to 3 or 4. That speed is the earnings inflection driver everyone is betting on.
And we're seeing the first big test of that right now with the plan to develop Mauritania's offshore gas reserves. That project seems absolutely critical.
Oh, it's everything. Mauritania is a multi-year growth wedge. If they pull that off, it validates the entire model on a global stage. It moves them from being a story, a concept, to a real execution-driven infrastructure company.
Okay, but that sounds like pure growth, which is great, but these are long-term projects. How do they stabilize things? How do they handle the volatility of the energy market?
That's a great question. They have this other side to the business, an existing fleet of what are called FSRUs, floating storage and regasification units.
So those are the ships that turn the LNG back into gas at the destination.
Exactly. And they pair that infrastructure with long-term contracted downstream deals for gas and power.
And these contracts are the key to stability, right? They're not just selling gas on the spot market.
Not at all. These are typically what you call take-or-pay agreements.
Meaning the customer pays whether they use the gas or not.
That's it. It locks in the cash flow. It provides that stable foundation that lets them, afford to take on the risk of the big, fast LNG build-out.
And we just saw a concrete example of that. They took delivery of the Energos Celsius FSRU. That's a real asset they can now deploy and lock into one of these long-term contracts.
Exactly, but we have to talk about the elephant in the room, the balance sheet. This company has been under, let's say, significant financial stress for a while. They've had to sell assets just to maintain liquidity. That history is the context for everything.
Which makes that recent announcement so important. They announced, about $3 billion in new debt and equity transactions. Management's calling it a proactive capital reset.
And it is.
Yeah.
It's potentially transformative.
Yeah.
I mean, if they execute, this deal does 3 things. 1, it pushes out their debt maturities, so it buys them time.
Okay.
2, it boosts their liquidity so that near-term cash crunch risk is much lower. And 3, this is the most important part, it makes it much more likely that these high-return LNG assets actually reach their commercial operation date, their CIE.
The CI being the point where the project stops burning cash and actually starts making money?
Correct. The whole model is asset-backed. The debt is secured by these long-term contracts, but the contracts are useless if the asset never gets built. This financing makes it much more likely the assets get built.
Okay, so if they've been under so much pressure and they just got this $3 billion lifeline, why are they plowing it right back into growth? Why not pay down debt more aggressively? It feels like they're doubling down on the risk.
And that is the absolute core of the investment thesis. It's a bet. They believe the return on these fast LNG projects is so high that it dramatically outpaces the cost of their debt. So the idea is to outrun the debt.
Outrun their liabilities, basically.
Yes.
Mm-hmm.
Grow so fast that the new cash flow just dwarfs the existing debt load. It's a massive bet on their own speed and their own ability to execute.
And speaking of easing pressure, that deal in Puerto Rico for long-term gas supply, that was also huge, wasn't it? Because it wasn't just about revenue.
Absolutely not. That deal also let them extend the due date on some interest payments, so it was a double win. Future revenue, yes, but also immediate breathing room on the financial side.
Let's circle back to the competition for a second. You have these giants in the LNG space with practically unlimited money. What stops them from just copying the fast LNG idea and, crushing New Fortress? What's the real moat here?
I'd say the moat is really threefold. It's modularity, integration, and being a first mover in certain markets.
Okay, unpack that. Modularity.
So we talked about speed, but it's how they're fast. They use standardized, repeatable units. It's like building with, I don't know, very advanced Lego blocks instead of designing and building a custom cathedral from scratch every time.
I like that analogy. So it's a product, not just a project.
That's a great way to put it. Then there's integration. They own the whole value chain. Upstream sourcing, midstream with the FSRUs, and downstream to the power plants. That gives them margin buffers everywhere.
And the third piece, market selection.
Yeah, they go where the giants don't. Emerging markets, smaller gas fields, places like Puerto Rico or Mauritania where you have to build infrastructure from the ground up and really understand the local rules. By getting in there first, they build a position that's really hard to replicate.
And the market got a pretty big vote of confidence in that strategy recently. Fluor, the huge engineering firm, got a contract for one of the fast LNG projects. That has to add a lot of credibility.
Oh, absolutely. Having a major, respected player like Fluor on board basically says, okay, this tech isn't just a science project. It's real, it's commercially viable, and we can build it.
So let's look at the stock itself. It has been incredibly volatile. You see these huge double-digit pops on any good news. What does that tell you about how the market sees this company right now?
It tells you it's highly sensitive to news, to catalysts. The stock has been trading at what you might call distress price levels. Like the market was pricing in a high probability of failure.
So any good news causes a massive re-rating of that probability.
Exactly. The stock is moving from being deeply oversold towards something more neutral, maybe even constructive. It's the beginning of a potential reversal, technically speaking. But it needs those catalysts to continue.
Okay, so what are the specific catalysts we should be watching for over the next, say, 6 to 12 months?
It's all about project milestones. We need to see hard progress updates. First gas, first cargo, especially for Mauritania. Any slips in that schedule, and the bull case gets shaky really fast.
But on the other side of the business.
You want to see contracting announcements. They need to put that new Energo Celsius FSRU to work on a long-term deal. And any new power agreements in their existing markets would be a big positive.
And then there are the macro tailwinds, which seem pretty favorable.
Very favorable. Global LNG demand is growing, supply is tight. That's a good backdrop. And, given how leveraged they are, if we start to see a shift toward interest rate cuts, that's a direct benefit. It lowers their refinancing costs down the road.
Okay, let's put our skeptic hat back on for a minute. Even with the new financing, the debt is still the monster under the bed. What's the number one risk that remains?
It's still execution risk, but now it's tied to a deadline. They've bought themselves time, but they have to use that time to get these projects generating cash fast enough to service that debt. Any major project delay, any big cost overrun, and those balance sheet fears could come roaring right back.
And then there's the legal noise. We've seen announcements about class action lawsuits, things like that. How much of a risk is that?
It's a distraction, for sure. Management needs to be completely focused on execution. But here's the counter-argument, and it's critical for anyone looking at this stock.
Okay.
The current valuation seems to already price in a lot of bad news, a lot of risk. The argument for the bull case is what we call asymmetric upside.
Asymmetric upside. Explain that in simple terms.
Okay, think of it like this. The stock might be priced as if there's a 50% chance they fail. If they do fail, maybe the stock goes down another 50%. But if they succeed, if these fast LNG projects actually come online and start printing cash, the upside isn't 50%. It could be 200, 300% or more.
So the potential reward is much, much larger than the potential risk from these levels.
If, and it's a big if you believe they can execute the plan. That's the bet.
So wrapping this all up, New Fortress Energy is a high-risk, high-reward bet on global LNG, and it's all tied to whether they can actually build what they say they're going to build on time.
That's it. So for you, the listener, what does this mean? It really comes down to your time horizon. To see the full story play out, the full ramp-up of these projects, you're probably looking at a 2 to 4 year hold.
Yeah.
But along the way, there's definitely potential for big moves, tactical upside around these project milestones we talked about.
That core idea using speed and that modular Lego block approach to disrupt a massive capital intensive industry, it's incredibly compelling. It's a powerful model, but as you said, it all comes down to execution. If you found this discussion useful and want more actionable analysis delivered straight to you, please remember to subscribe.